Hello, this is Business Now, reaching you live from IBrandTV news studios in Lagos, Nigeria. Coming up, federal government loses 13.21 million barrels, oil worth of 603.64 billion naira in 2022. Central Bank of Nigeria injects $7.6 billion in 5 months through foreign exchange sales to authorized dealers. Nigerian National Petroleum Company Limited loses 470,000 barrels per day, amounting to $700 million monthly to oil theft. Insurance sector grew by 17.28% in the second quarter of 2022. Hello again, and thanks very much for joining us. Here are business stories we're tracking at this hour. I'm Michael Nath. Nigeria lost about 13.21 million barrels of crude oil with an estimated worth of 603.64 billion naira between January and August this year. An analysis of the monthly reports of the country's crude oil and condensate production showed. Figures contained in the reports obtained from the Nigeria Upstream and Downstream Petroleum Regulatory Commission in Abuja on Sunday indicated that the country's oil production only increased in 2 months but crashed in others. Total crude oil production in January, for instance, was 43.35 million barrels, but thus dropped to 35.22 million barrels in February, indicating a loss of 8.13 million barrels. It moved up in March, increasing by 3.14 million barrels to close at 38.36 million barrels in the third month of 2022. This, however, was not sustained as production dropped to 36.58 million barrels in April, and the country lost 1.78 million barrels in that month. The oil production losses persisted in August, crashing further to 30.14 million barrels, representing a loss of 3.46 million barrels. It was observed that the total losses stood at 19.34 million barrels, while what was gained was 6.13 million barrels, leaving a cumulative loss of 13.21 million barrels during the review period. The Central Bank of Nigeria says it injected $7.16 billion into the economy in 5 months through foreign exchange sales to authorized dealers. The Apex Bank, which said this in its monthly economic report for May 2022, explained it intervened in the FX markets to stabilize the value of the Naira with $1.164 billion and $1.39 billion in January and February, respectively. The Apex Bank added that it pumped $1.82 billion in March, $1.56 billion in April, and $1.18 billion in May 2022. Now, despite these interventions, the Naira depreciated 0.7% to 401.15 Naira a dollar in the official market within the period in question. However, foreign exchange sales at the small and medium enterprises window rose 8.4% to $0.12 billion in the review period. The insurance sector grew by 17.28% in the second quarter of 2022, according to figures obtained from the National Bureau of Statistics Gross Domestic Product report for the period. As a whole, the sector grew at 29.9% in nominal terms year on year, with the growth rate of financial institutions at 31.63% and 17.28% growth rate recorded for insurance. According to the report, the sector's contribution to the overall nominal GDP was 3.63% in second quarter of 2022. That's higher than 3.21% it represented in the previous year and lower than the contribution of 3.8% made in the preceding quarter. Growth in the sector in real terms totaled 18.48%, higher by 20.96% points from the rate recorded in the 2021 second quarter and down by 4.76% points from the rate recorded in the preceding quarter. Quarter-on-quarter growth in real terms fell by 5.96%. The report noted that the contribution of finance and insurance to real GDP totaled 4.25%, higher than the contribution of 3.72% recorded in the second quarter of 2021 by 0.54% points and lower than 4.51% recorded in first quarter of 2022 by 0.25% points. 9 years after unbundling of the country's power sector, an expert has faulted that which took place in 2013. Speaking on the IBrandTV's Business Breakfast, Sydney Akimoladu, the Chief Executive Officer, Pace Solar, claimed that since the unbundling of Power Holding Company of Nigeria, the challenges of the sector persists. Now, according to him, all hopes and expectations that the process will bring about the desired change in the sector have significantly been unfruitful.
PACN, which was formerly NEPA, was unbundled, and Nigerians were happy that at least the private sector will take over the industry from government, and then we'll get value for the investment. But between you and I, that hasn't been the case. A whole lot of factors, I think, must have played, and chiefly of those is the fact that the privatization process was done on a faulty foundation. And when you have something like that done on a faulty foundation, you expect the outcomes to almost be the same. To be fair, Nigerians haven't gotten anything much better. Maybe to just be modest a little bit from what we used to experience in the days of NEPA and PACN. So 9 years, millions of dollars, like you said, going back the Obasanjo administration, now we're in the Buhari administration, more monies have been pumped in, but little has come out on the other side. PACN, which was formerly NEPA, was on.
Now, data released by Nigeria Interbank's settlement system has revealed that transactions worth 33.2 trillion naira were performed electronically in August through the NIBSS. Data released by the Nigeria Interbank settlement system has revealed that transactions worth 33.2 trillion naira were performed electronically in August through the NIBSS instant payment platform. The latest figure brings the total value of e-payment deals in the last 8 months to 238.7 trillion naira. The NIBSS data also shows that the August 2022 record came as an all-time high e-payments value recorded in a month since the deployment of the platform. Compared to the 29.3 trillion naira recorded in July, this shows a 13.3% growth. Year on year, the e-payment value has increased by 50% compared to 22.1 trillion naira recorded in August last year. The surge in electronic transactions shows that more Nigerians are embracing the cashless policy of the Central Bank of Nigeria. According to the NIBSS, the value of e-payment recorded was a reflection of the increase in the volume of deals within the month. The Nigerian National Petroleum Company Limited says it loses 470,000 barrels per day, amounting to $700 million monthly to the activities of all oil thieves. The Group General Manager, Crude Oil Marketing Department, Rose Eshiet, disclosed this to journalists on Saturday during a tour of the facilities of the NNPC. She said pipelines, particularly those around Bonny Terminal, could not be operated due to the activities of criminals. She said the number of barrels stolen was very huge daily, explaining about 270 barrels that were supposed to be loaded. Bonny no longer going to be loaded because of theft. explaining the dire economic situation facing the country as a result of the losses and how the NNPC has evolved a technologically driven all solutions to tame the menace. The Group General Manager of the National Petroleum Investment Management Services, Bala Wunte, said urgent action was required. Still to come, Ethiopia's inflation slows in August as food prices ease. Details of this and more after this commercial break. Stay with us. You're watching Business Now on IBrandTV, Lagos. Now to Africa news. Ethiopia's inflation decreased in August compared with a month earlier, helped by a slower rise in food prices. Data from the country's statistics office showed on Monday. Consumer inflation fell to 32.5% year-on-year in August from 33.5% a month earlier, the Ethiopian Statistics Service said in a statement. Overall month-on-month inflation fell to 2.9% from 3.1% in July. The Statistics Office said food inflation dropped to 33.2% year-on-year from 35.5% in July, while non-food inflation rose to 31.5% from 30.4%. South Africa's rand strengthened in early trade on Monday as the dollar weakened ahead of key U.S. inflation data this week that might give the Federal Reserve room to slow the pace of rate hikes at its September 21 policy meeting. At 0703 GMT, the rand traded at 17.1700 against the dollar, or 0.92% stronger than its previous close. Economists at ATM Analytics said in a note that the dollar rand has consolidated around the 17.3000 mark overnight, with the market seemingly awaiting fresh directional impetus that may come from tomorrow's U.S. CPI data. Pulling back the lens slightly, there is still plenty of two-way risk in the market as the USD's extreme over-evaluation is weighed against market risk and uncertainty surrounding the Federal's policy outlook, Europe's energy crisis, and China's economic showdown, ATM Analytics said. On the stock market, the top 40 and the broader all-share rose almost 1% in early trade. The government's benchmark 2030 bond rose in early deals with a yield down 7 basis points to 10.235%. Now to foreign news. Oil prices fell on Monday with the global fuel demand outlook overshadowed by COVID-19 restrictions in China and the potential for further interest rate hikes in the United States and Europe. Brent crude futures dropped $1.01 or 1.1% to $91.83 a barrel by 0630 GMT after settling 4.1% higher on Friday. U.S. West Texas Intermediate crude was shown down $1.13 at $85.66 a barrel or $1.13 after a 3.9% gain in the previous session. Prices were changed last week as gains from a nominal supply cut by the Organization of the Petroleum Exporting Countries and allies, including Russia, a group known as OPEC, were offset by ongoing lockdowns in China, the world's top crude importer. China's oil demand could contract for the first time in 2 decades this year as Beijing's zero COVID policy keeps people at home during holidays and reduces fuel consumption. Meanwhile, the European Central Bank and the Federal Reserve are prepared to increase interest rates further to tackle inflation, which could lift the value of the US dollar against currencies and make dollar-denominated oil more expensive for investors. Britain's economy grew by less than expected in July, raising the risk that it is already in a recession with a sharp climb in energy tariffs hurting demand for electricity, and a leap in the cost of materials hitting the construction sector. With inflation at 40-year on high, or more than 10%, gross domestic product expanded by 0.2% from June. Official data showed on Monday, weaker than a median forecast of 0.4%. And the 3 months to July, GDP was flat compared with the previous 3-month period. Some economists said Monday's data suggested the economy might be on course to shrink in the July-September period, having contracted by 0.1% in the April-June quarter. The Office for National Statistics said anecdotal evidence suggested that the surge in power prices was changing consumer behavior and energy demand had fallen. Electricity prices leaped by 54% in 12 months to July, part of the surge in power costs that led to the new Prime Minister. European shares jumped on Monday after Ukrainian forces made a rapid advance in Kharkiv province in Russia's worst setback since its Kiev push was abandoned in March, while the euro extended on last week's European Central Bank-inspired gains. On Saturday, Moscow abandoned its main bastion in northeastern Ukraine in a sudden collapse of one of the war's principal front lines after Ukrainian forces made a rapid advance. The broad pan-European Stoxx 600 index was up 0.7% in early trade, hitting its highest since the end of August. Germany's DAX rose 1.14%, France's CAC 40 and Britain's FTSE 100 both jumped 1%. Asian shares also rallied in slow trading, with China and South Korea out for a holiday. MSCI's broadest index of Asia-Pacific shares outside Japan added 0.7%, having bounced modestly from a 2-year low hit last week. Japan's Nikkei added another 1.2% after rallying 2% last week. The euro was last up 1.5% to $1.0194, touching its highest against a softening dollar since August 17. Meanwhile, peripheral Eurozone government bonds underperformed their peers, hurt by reports that the ECB may next month kick off a debate about reducing the size of their balance sheet.